Great to have you here today, Gary. I'm really looking forward to what you've got to share with us. Even just now, before we got on this interview, you've been sharing some great stuff with me about what you've been doing in business and some fantastic tips that you got. So I know that everyone who's listening is going to really love what it is that they hear from what's about to happen. But I really want to just start because a lot of people who are in our podcast audience won't know who you are yet. So I'd really just love it if you could introduce yourself a little bit. What do you do now, Gary, and what's your past that's led you to where you are?
Thanks for having me, James. My background has been in financial planning, 24 years running our own practice. Started it with 0 clients, and we sold the practice in 2007, and the business was looking after, I think it was over about $190 million worth of clients' assets, and we had 15 staff. So that was my background. Currently doing property development, where we look at commercial properties and also residential subdivisions, where we buy greenfield sites and they go through the planning process with council, and we build roads and sewerage and underground services and sell the blocks. So that's us. That's what we're doing now.
Yeah, and what a fantastic journey. And I noticed that you neatly skipped over how long it took you to build up that financial planning practice. You said you started from just working by yourself and built it up. How long did it take you to do that?
It was 24 years we owned the business, and what has been one of the most satisfying things is we built the business by recruiting people that we believed had character, and we fast-tracked their training to get them to a highly productive stage as early as possible. And I loved, just a little tip, I suppose, I always looked at it in an interview, was what these people did in their leisure time. Were they givers or takers from life? And if they were volunteering and they were active in community service, that was a very strong motivation for me to employ them. And because I thought they would be giving to our clients and to me as their employer in the working sense if they were prepared to volunteer privately.
Yeah, that's fantastic. I love that. And right off the bat, a really hot tip too, because it can't have been easy to grow from just yourself. I don't know if you had any other business background or not, but I know from what we've done growing businesses, the very first time you go through that process of starting up by yourself, generally you're good at what you do, the hands-on skills, but maybe not so much at running the business side of things. How did you find those first years? What were the biggest challenges that you faced yourself?
Biggest challenges were always staying focused, believing that the goal that we had set was attainable, and it was going to require rolling up the sleeves, working smart, but I can't deny that the harder I worked, the luckier I became. That's a worn-out expression possibly, but it is true. I had to do some study concurrently with starting a fresh business because the government changed the regulations on licensing to become a financial advisor. So I would get up at 3 o'clock in the morning, shoot into my office, which was conveniently next door. So I had a 45-second walk to our office in the separate building next door. And then I would dictate client strategies. Then I would be back for breakfast with the children and my wife, and we got the children off to school. Then I would be back in for a full day of appointments, home for dinner, and then back in to do some study. So once the children were in bed. So we worked jolly hard. My wife has been pivotal in our success too. We're a good team, and we looked out for each other. But there were times, particularly during the collapse of a building society in Geelong, Pyramid Building Society, we had the toughest time in business because we would have to pay our staff first, and my wife would say, how much have we got left at the end of the month? And often it was very skinny. So we got through some really incredibly tough times, but we never lost sight of our goals and our focus, and we knew that good times would come. And invariably they did, and but that gave me empathy with clients who perhaps were doing it tough, because they would say to me, Gary, you wouldn't understand what I'm going through. And I was able to share with them, well, yes, I do. I mean, I've been there. I know what it's like to have banks breathing down your neck. And yeah, that tough times shouldn't be despised. They can be great growing opportunities.
Yeah, and I love it that it's determination and commitment that got you through that too. That's really what you're saying, or what I'm hearing is it's not easy in the moment, but if you just keep doing the do, and maybe you do go skinny for a little while, as long as you know that your business structure is sound, you can keep doing the do and come out the other end of tough times like that. So well done on that. I also know over the time of being a financial planner, you must have worked with a lot of small business owners, like you said, other people who are going through tough times or going well. What would you say from your experience working with all those business people? What would you have as your kind of big hot tips or mistakes people make in their finance side of things that you can give us some advice around for small business owners?
Sure. The temptation is, I suppose, in small business, when you have a good month, that you go and lavish on a new car or a new set of clothes or whatever, and it's the motivation for doing so might be to keep up with the Joneses, and I have seen that time and time again where you've sat with thousands of clients over my career. And I've seen them looking $1 million, but when you get down into the nitty-gritty of their finances, they were doing it all on borrowed funds in the order that they were looking impressive to people outside their home. And they generally weren't happy. They were living the big lifestyle, but generally devoid of internal happiness. So I guess don't keep up with the Joneses. Is number one message. There's no compulsion. Last year's fashions can go around again, but just make sure that you do invest in things that matter. And I always loved this principle, and I used to call it the 10-10-80 principle. Give away 10% of income. And it's an incredible principle that people have adopted. Even Henry Ford used to adopt this principle of giving 10% away of gross turnover to a worthy cause, and then invest 10% to make sure that you're setting aside something for tomorrow and something that grows, not just a bank account necessarily, but something that gives growth opportunity, and then try and live on the 80% or less. And that principle has worked magnificently for clients that we dealt with. And it's interesting, I always used to see people who had a generous attitude in that 10% area of giving, that they ended up having good things occur for them. And it's just a principle, but we could almost guarantee anyone who was tight and stingy, you could guarantee anything that was going to go wrong would go wrong with their shares or their portfolio. But the generous spirit people, they were the ones that had seemingly a good ride in business or in their personal lives financially. So there are just a couple, but I guess another one I really like, James, is pay off your non-deductible debt first. I classify debt as in two categories: good debt and bad debt. And good debt is where you can claim the interest as a tax deduction, and that's like a car financing arrangement or business equipment, office equipment. Or the other one is bad debt is personal loans on luxury items, boats and things like that. So the principle is to pay off. Even the home loan is a non-deductible debt unless you're running your massage practice from your part of your home. Then a proportion of your interest cost will be deductible. But try and get what I try and suggest is build up a redraw account so that there is basically money on standby should an opportunity arise. Not a luxury item, but I'm saying an opportunity that can set you up for life. And it might be a distressed asset. A practitioner down the road might be selling his prime property that you've driven past time and time again thinking, wouldn't it be wonderful to have a practice located there? That practice might come up for sale, and surprise, surprise, it'll be the person who's made preparation to build up a stockpile of cash that will be able to take advantage of that opportunity when it arises. So build up, redraw amounts in home loans to be able to seize those opportunities.
I love that. Our accountant used to call it a war chest. He'd be like, make sure you've got a war chest there so that when you need it, you've got resources that you can call on. I actually like the idea of an opportunity much more than war. But either way you look at it, it's fantastic to have more than you need, more than just scraping by every week. We actually want businesses to be flourishing enough to have that opportunity to put aside extra 10% for giving, an extra 10% for investing, and actually having that be possible and be fun and easy for people is ultimately where we want businesses to get to. So that's great. I love that. Is there something you can say for the business people who might be like, Gary, that sounds great, but I've just literally, my business is not going well enough to take money out of it yet. Do you have any advice you could give to people around business? Like, what are your biggest tips for how to run a business better or how to make your life as a business owner easier?
Yes, I'm a great believer in goal setting. There's power in written goals. And when I first started in business, I paid for a leadership program, and it was the best investment that I've ever made. It was costly at the time, but the principles that I learnt back in my early days of business of setting predetermined, worthwhile personal goals was so important. And I covered, or in this program, it taught me to set goals, short-term and long-term, in family, financial, social, spiritual, and mental. And I used to deliberately write down goals. What do I really want to achieve from being in business? And it's amazing. I reflect back on those written goals that I had sort of almost foolishly wrote down on the page, but it was something that was deep in my heart that I really wanted to achieve. And to put a line through that and write the date that I achieved it, and my wife achieved it with me, of course. But we basically have seen power in goals, and I still set goals to this day. A lot of them are more around where we want to travel to and do all the things that semi-retirees do. But in starting a business, they might have been just small little bunny steps, but success breeds success. And once you've conquered that goal, it makes you to write a little bit more ambitiously the next set of goals. And that should be done almost on a weekly basis. As you think of something, I'd put it onto even an exercise book with just those headings: family, social, spiritual, mental, and financial, and family. Sorry, was the other one. And if you're deprived of seeing a lot of your children's sporting activities, just put that down. I'm going to go to every swimming carnival, every sports event this year. And it's surprising how easy it happens when it's a written goal. It commits you to action.
Yeah, and it makes you think about how you can actually make it happen. That's what I love about goals. We do a lot of goal setting, and we teach that to our clients as well. It's a really great way of keeping people focused in one direction in their business. One of the things I've noticed is last year, we're just in a new year now, so last year, one of the goals I've had for several years in my life is to be able to finish work at 3 p.m. on a Friday so I can knock off early and go pick the kids up with my wife and spend like an extra bit of weekend, before the weekend even starts. We've got a little bit of time on Friday afternoon that we can spend together. And I must have had that as a goal for 4 or 5 years, really, since our kids were old enough to be going to school. And I've been able to do it every now and then. Like, it's not something that's never happened, but it hasn't been consistent until probably the last 6 months. And sometimes you've got to achieve the goal and then even look back. Like, it's been the new year just recently. And part of my New Year's looking back is like, you know what, there's a goal that I've achieved this year. I haven't even really paid that much attention to it, but how good is it? And being able to look at that and say, yeah, we're making progress, not just in business, but in family or personal, whatever you want to call that time. It's a fantastic way of being able to encourage yourself to keep moving forward, become a more whole and successful, I guess, but in all sorts of different areas of your life. I love that. Yeah, that's nice. What about from the point of view of being a financial planner? I know financial planners have things that they sort of talk about quite a lot with their clients. what would you say are the most important things that small business owners should have in place from a financial planning point of view?
Certainly, don't ignore superannuation. A lot of us think we're too young to be thinking of superannuation, but the simple compounding effect that superannuation has is so important, and getting an early start is really important. Taking advantage of the government's the tax breaks that they give you for superannuation is really important, and you pay superannuation for your staff quite probably. Why not pay yourself as well? Because it's nice to have a diversified approach as you come towards your retirement, rather than relying on the business practice as being your sole retirement platform. It's good to have a little bit of shares in international property and or international shares, etc., in your retirement mix. So don't ignore superannuation. And one of the other aspects that I really like, James, is to make sure that you have risk insurance in place. And by risk insurance, I mean life insurance equal to or greater than the amount of your debt. Total and permanent disability or trauma insurance is very important. And probably the most important one for sole traders is income protection insurance. This protects the biggest asset that your practice has, and that's your ability to earn income. And there's an analogy that I used to jokingly mention to clients was I posed this question: if you had a chook that had laid a lot of golden eggs and had the capacity to lay more, what would you insure? The eggs that it's already laid or the chook? And a lot of people would say, oh, you'd go for the eggs that are already on the ground. You'd insure the car, the contents, the caravan and the boat, as an example. And I'd say, well, no, I reckon your ability to earn more income is going to be far greater than the aggregate of all those things. So I believe you should insure the chook. You are the biggest asset, as I said, that the business has. So insure you and your ability to earn income. And the number of people who have come up to me socially and just said, Gary, you recommended an insurance program as part of our financial planning strategy. And at the time, we were somewhat reticent, you might remember. I said, yes, clearly I remember. Well, we want to say thank you for being persistent on that, because the manure did hit the fan, and Stephen was off work for 8 months trying to get over a cancer or a stroke or something, and he became totally and permanently disabled, and the income protection insurance just kept paying us, and we didn't have to sell the home. The children could be educated. We did have a family in America whilst seeking a cure, and so they just say, we're here today because of you. And I say, well, no, the insurance industry has had its critics, but when it does its job, it does it very well. So get a good insurance program around your lives, and that's pretty. So there's some of the key things that I would recommend, James.
Yeah, I love it. Definitely with insurance, we've seen both sides of that with clients. Right now, we've got a client who's been injured and so can't treat anymore. He runs a nice little clinic with a handful of staff, and he's got insurance, which has been able to prop his personal income up. He's only physically injured, so he can go into the business, into the workplace and manage the staff. So they're able to keep the business turnover going, but he wouldn't have enough left over to be able to pay himself what he was before without the insurance being able to back that up. So it takes so much stress out of the situation when you've got that insurance there and it's been able to pay you ongoing. We've also had other clients that have been injured and not had any of that kind of insurance in place, and it has been a real struggle to be able to even make ends meet. Now, of course, they've got through it if they need to in some way or other, but it definitely makes it way easier and way less stressful if you've got some insurance to be able to back that up. One question I've got, this is a little bit of a specific question. I hope it's okay to ask you this, but I've heard of people who, because they run a small business, they don't pay themselves wages. They're just taking like either owner drawings or a loan, whatever they call it, from the business. And then when they go to claim on their insurance, they're like, oh no, you haven't earned a wage, so we're not able to pay out income, even though it's because of one of those things that accountants do to change tax around and all that kind of stuff. Is that something that people need to look out for as small business owners, or is that just something that I've heard on the wind?
No, you're quite correct. And the temptation with a cash-based business is to not declare all income, and that will bite you fairly on the bottom should it come to claim time, because I believe we have a duty to pay tax to keep the nation happening, and come an insurance claim, they will ask for your financials, and if there is insufficient income being declared through your tax returns, they have no consideration for any cash that may end up in your pocket. So it's what is in your tax return that will determine what percentage of benefit you will receive. So there's go in very, very carefully in that regard, because there's a thing, 75% of pre-loss earnings, your income or your claim benefit should not exceed 75% of pre-loss earnings. So if those pre-loss earnings are not there on the books, then sadly there's going to be a big disappointment, and you've paid a lot of premiums for nothing. So
yeah,
and that leads me to perhaps another bit of advice, James, if I may. Get a good advice team around you. Each practitioner should have a good relationship with a bank manager or a mortgage broker. They should have a very good insurance person for their fire and general insurances, the practice, the consequential loss, public liability, professional indemnity type issues. A very good solicitor and accountant is excellent, making sure that they help you with some cash flow planning, some tax minimisation strategies, things like that, and a good financial planner, as I've already said, and also a real estate agent, that if you're in the hunt for other properties, that you've got a relationship where you may get an opportunity to have a look at a property off market before it goes to the public, and you might get a privileged position to look at something before everyone else does. So they're the sort of key people that I've had around me. And if I may give an example of a situation, we built a childcare centre, and we've got a drive-through coffee shop at the front of it. But when we were looking at that, I went to our accountant and I said, this is my concept of what I'd like to achieve, sort of buying one of the properties with superannuation and the other with outside super money, and separate the titles, because and anyway, I thought it was a great strategy in my mind, but I'd been out of the industry a couple of years at that stage. And he said, great strategy, Gaz, I reckon we can go one step further, but we're going to need some specialist advice. And so we went to Melbourne and we got some high-level tax planning advice, and we could do the whole lot through superannuation using limited recourse borrowing, which was just a great way of getting money into superannuation, or getting money into superannuation, and it reduces my tax significantly. And it was a brilliant strategy in hindsight, it would have passed me by had I not had a good advice person in the form of our accountant. So get a good team around you.
Yeah, I love that. And especially as businesses grow, I know a lot of massage therapists really don't love numbers. Some do, that's fine, but the majority of massage therapists are very hands-on, very kinesthetic. And when it comes to any kind of like spreadsheets and numbers and figures, their eyes just glaze over a little bit. And, you know, you don't have to be an expert at all those things if you've got the people around you that can help support you in those areas. But what we don't want is for you to just turn a blind eye to it and think it doesn't matter. It's like, if it's not your strength, it's even more important to get someone in there who you can trust, who you know has got your back, who's looking after you in the right way. So I love that. That's really good advice. Yeah, thanks, Gary. What about, do you have any, I think looking at all those things that you've talked about, your advice for small businesses and from your own business experience, a couple of times you've mentioned property, and then right now you're a property developer. And I kind of feel like, you know, there'll be some people listening to this who maybe have their own home but have never looked at property development. There'll be other people who don't even own their own home. And maybe there'll be some people who are a bit more advanced in those strategies. But do you have, like, if someone is in a place where their business is going okay, they're earning a reasonable income from it, and they're looking at what you've said is that 10% to invest, where would you actually suggest investing? Is property the right thing to do, an investment property of some kind, or is the share market the right thing, or should they add more to super? What's the deal?
It's getting very close to giving advice, which I'm not licensed to do.
Okay, yes, of course.
Right in.
Can you say something in general? In fact, we might even edit that bit out if you'd rather me ask it a different way. Maybe I will. I'll just ask the whole question a different way.
What are the options available to people, perhaps?
That might be a good way to go. Cool. I'll ask that. So, Gary, given that you've been a financial planner for so long and you've worked with a heap of different small business owners, and I know there's going to be some people listening to this podcast who are like, yeah, you know, I love this 10-10-80 concept and I'm ready to invest. What would you say are maybe the most popular options for people to invest in different places? What's the most likely place that they're going to go and look?
I'll start with outside superannuation investing first.
Great.
There are opportunities in the share market. The market fluctuates. It's valued daily. So there are very good buying opportunities as we speak today where you can buy into either managed funds or directly with the share market, and perhaps getting a CommSec or a Macquarie share market account, and you can select a range of different shares that you might like to research and do your own homework with. Or you can even buy a company on the Australian share market that does all that buying for you. Argo Investments is one that springs to mind. So that's something where you can build up a base of shares outside of superannuation. They pay dividends and generally they grow quite nicely. Then if an opportunity to buy a property comes along, you can cash those shares in within 24 hours and you can take advantage of a property opportunity if you wish. On the other hand, superannuation is purely an amalgam. It's a legal structure which is for retirement. It comes with a lot of rules. That means you cannot get your hands on the money until certain dates in the future. But you can invest in property, in shares, cash and fixed interest within that structure as well. And so unless you have about $400,000 in super, you're best to just go for one of the lowest cost funds that you can get your hands on. And many of the industry funds, as they're known, offer insurances through superannuation. So again, that word insurance is there, but that's the best place you can buy many of your insurances. And make sure that your money is being invested in the right portfolio. If you've got a long time to retirement, you may be prepared to take a higher level of risk to try and outperform a conservative portfolio. So another thing I've done very successfully is often I can look at a property and say, well, that's way too much for Carolyn and I to take on ourselves. And this is what I did 20 years ago. We bought a parcel of land in a prime position in our city, and we knew one day it would be rezoned for urban development. And so two of my mates were there at the auction, and we got together and we said, we should buy this. So we bought it, and we then offered the opportunity to 9 other family members and friends. And we've been on that project for 20 years, but each person put in $50,000 back 20 years ago, and each of the investors have made over $1.5 million now. Wow, so fantastic. It's been an amazing investment, and we've still got 20 more blocks to sell, and one of our blocks is worth more than we paid for the whole parcel of land. So it's called syndication, and we still do syndicates today where we get people who want to put a little bit in to join with others to make a bigger amount, and then we can play where the big boys play, and by linking arms we can syndicate our way into bigger property investments, and hopefully a higher return than is possible through conventional means. So that's another way. And it could be just family linking arms and saying, let's all put in 100 grand and we can buy a commercial property, which we don't have tenant dramas. The tenant pays all the outgoings rather than 3 or 4 houses in the suburbs. Maybe commercial property is something you should aspire to, and that gives you a better rate of return without the dramas of a residential tenancy.
Huh.
So
Fantastic.
everyone should seek their own advice, James.
Of course. And I love it. And, there will be some people listening who are ready for that level of investment and others who are still just right at the start of that journey. But it's great to have that vision set out in front of people, because I know sometimes when we first start, even just being young, we tend to have a very short-term thinking. It's all just new, everything's exciting, and we don't think too much about the future. I know this is my own experience. And I turned 40 last year, which to me is like, oh my goodness, now I've got to actually start thinking about the future a bit more. And it really has made me shift my perspective a little bit into, well, what can I do to build up a longer term strategy so that when I do get to that retirement age, even for massage therapists, a lot of them need to retire after not too many years because it's quite a physical job. Or I should say they need to stop doing so much hands-on treatment, maybe not retire, but they need to shift their focus of work to some other part of the business. That's probably a conversation for another time. But I love it, Gary. Thank you so much for sharing what you have today. It's been really great to hear some of your experiences, some of your journey, and some of the great strategies that you've had for us. Thank you very much, and best wishes for this property development you've got going on. I can't wait to hear how that goes.
Thank you, James. Thanks for having me.
It's a pleasure. We'll catch up with you soon.